Welcome back. In this video, we are going to look at stock price movement. Before we look into stock price movement, let us have a look at what we have covered so far briefly. So, in earlier videos, we said that we will be looking at company Infosys. We also said that the price point and date in discussion is 15th October and current market price is 3354.8. Face value of Infosys is 5, and we also looked at 52-week high and 52-week low and which days they occurred on. We also looked at what is the promoter holding in the company. We identified that the company provides services in information technology industry. We looked at the business services, technology services and outsourcing services it provides. We also looked at variety of Infosys products. And apart from that, we also looked at the investor relationship area on company's website. We also got to know that it operates in 30 countries and has $7.91 billion of revenue. The company was founded in 1981 and as on date it has about 1,60,000 employees in total. Now, to get further information about the company and to further understand how company has been performing, we begin our analysis by looking at the stock price movement of the company. So let us have a look at that. We have done that by picking up the price data point for the company. So for Infosys, please note that we have taken adjusted stock price. Now, what is adjusted stock price? We will see later when we deal with splits and bonuses. So we have taken price point from 1st April 2005 and we have taken the data points till 15th of October, which is the recent date we started this analysis. Based on the information available, we have calculated the returns of the stock. So we identified 1 day return, we identified 1 week return, we identified 1 month return, we identified 3 years, 6 months, 1 year and 5 year and 3 year returns. Now please note that these are overall returns. These are not based on like specifically 3 year and 5 year returns are not CAGR returns. These are overall returns. So what it means is that if you had invested exactly 1 month before in the company, so let us say as on 15th of September, then you would have made a gain of 12.1%. Had you invested in the company exactly 1 year before, which is 15th October 12, then you would have made the returns of 41.8. Now, further more observations over here, that if you observe that the company had given, like company would have given you returns of 41.8% if you had invested 1 year before and 43.4% if you had invested 6 months before. Now there is not much difference between if you had invested 6 months before or 1 year before. It means that probably the price has not moved in the first half of the year which ended on 15th October. So said in other words, if you look at the year starting from current 15th October to last year 15th October, in the first 6 months, so let us say till 15th April 2013, the stock has not really performed. Had you invested 3 years before, meaning if you had invested 3 years before on 15th October 2010 and wanted to exit today, you would have merely made 9.1% gain. Now this is very less compared to the gains over here. Now of course the investor who invested over here made quick bucks compared to investor who has been holding on to stock for 3 years but has earned only 9.1% returns. So probably 3 years before the stock price was at very high level compared to what it was in the middle of the time, and after that probably the stock price was very high level, then the stock fell down and people who invested over here made handsome returns when the stock returned back. So if you see, if you invested 3 years before, which means at this price point level your gains are only this much, but if you invested anywhere below this level, so your gains would be tremendously higher compared to had you invested 3 years before. So these gains are much higher. So that is what the explanation can be given. Now if you are invested about 5 years before, your gains were stupendous, which is 151%. Now there are a lot of questions that can be raised just by looking at the movement in the stock, and few of the questions could be: why this is happening? How can I predict the stock performance? Where will the stock price move ahead from here? When should I buy? When should I exit? Is it right point to get into stock? What determines stock performance? And there will be many questions. And we believe that the beginning of the questions is the beginning of analysis. So let us quickly summarize what we have seen so far. The questions I am left with after looking at the stock price returns are: how do I interpret the stock price movement? What are the factors that really affect the stock price movement? How can I estimate the stock price movement? When should I buy and when should I sell the stock? And we believe that the beginning of such questions is beginning of analysis. Now your activity is to collect the data points for company TCS. Like earlier you collected this information for TCS, now you need to collect the price data point for TCS. This information will be available to you under historical data points under TCS stock code. Collect data points for TCS, identify similar information, calculate the returns, and try to reduce or have some questions based on the numbers that you got for TCS. Maybe you can extend your thought process and compare how the stock movement of TCS has been vis-a-vis that of Infosys. That's it for now. Thank you.